Good morning, everybody. I hope you're all doing incredibly well. Apparently, it is a bank holiday Monday here, so that is why there is nobody out and about this morning. Going to be starting very shortly. I have tweaked the mic setting. Hopefully, this is coming through a lot louder than it was. I've increased it by about 20%. So let's see how it goes for today. Good morning, everybody. Welcome back to Crypto Warehouse. It's a Monday and yet another important week for crypto. But American markets are closed today. It's, I think, somebody's birthday. We've also got a bank holiday where we are, so there is nobody out and around, but we still have plenty to talk about. I know it's a Monday. I know we don't normally have a lot to talk about on a Monday, but this is different. We have a lot to talk about today. We've got an awful lot of X-Files. We're going to be talking about Cathie Wood. We're going to be talking about the American administration and the trillions that are coming to crypto. We're going to be talking about Ethereum getting towards all-time highs with regards to staking. We're going to be talking about Solana, Aave. We've also got the question, have I had a Brazilian? That's the question that everyone's been asking. And then we're going to finish with a wallet warning about Ledger and Trezor being targeted by scammers. Excuse me. So, we are back. There's a few good mornings to have in chat. I know KB is here, I know Hidden is here, and I know there's an awful lot of people over on Binance Square. I hope you're all having a great morning. I've just dropped a red packet over there. We're going to go and have a look at the charts in a minute, but one thing I do want to point out, we will be having our next quiz night on Wednesday. It is the Wolfies quiz night. It will be 7 p.m. Central European time. It will be open to everybody on Binance Square. You can play along because guess what? Binance Square is about 4 seconds ahead of somewhere else. When it first started, there was about a 12-second lag, and now you guys are 4 seconds ahead of somewhere else. So I do expect you to play, and I do expect you to win, but it was a clean sweep for another platform last time we did this, which was 2 Wednesdays ago. So I do expect the Binance Square people to show up on Wednesday and try and win some of those prizes. We will be giving away prizes on the night. The top 3 are going to win, and you're going to win big. We're going to pay you out on Binance Square as well. So that is all the introductions we kind of need. We've got a lot to get through. We're going to go over and talk about the charts. Have they shown up? Why do they not show up? They randomly don't work. And then for some reason, literally 3 minutes before we went live, we had a slight interruption to the stream, and then I started with a cough. I've been perfectly fine all morning, except until now. Right then, Bitcoin got a little bit too excited for my liking. It got above $70,000 on Sunday. In fact, I made a video talking about it, and we're going to cover that when we talk about Cathie Wood in a minute. Bitcoin is back at where it was pretty much, I think, last week, beginning of last week, middle of last week, 69,000, back at its previous all-time high. Ethereum, which was just over $2,000, is now back below $2,000 XRP. However, I mean, look at this. This is good. This is good. $1.50. That's up 7.3% in the last week. Decent. Solana is above $85. I'm very upset about that. We dropped below $100. I bought at 92, I think. We dropped below $90. I think I bought at 83 or 84, something like that. And I really wanted us to go down towards $74,000, $75,000, and I would have bought Solana again. But we've had a bit of a bounce in the interim, $85, all good. We're going to talk about what I think could happen later on. And then a few other coins. Cardano is now dropping. It's $900 million outside of the top 10. But Mr. McDonald's himself, Charles, dropped some really important alpha about Cardano, which I think I've included in the X-Files. And I think this is what we've been waiting for. One thing to point out is Hyperliquid is below $30. $22 to $24 or $25 would be an incredible buy-in on Hype. Just saying. Not financial advice, of course. Now, gainers, I want to point this out to you about Stable. because it's important to understand this is a pretty much brand new coin. It's only been out for a few weeks. And I was kind of looking at this chart today. If you go over the 1 month chart, for example, it's put in 2 previous decent highs. It's had a massive correction to the downside here. It's had a correction to the downside here. It's a fairly volatile token. So my advice would be is don't chase the top. Don't start buying stable because it's at the top of this chart. One of the biggest mistakes you can make in crypto is to come in here and buy the top 4 or 5 tokens, because I guarantee you there'll be a profit taking 2 days time and you may be down 20%. I expect stable to probably drop off and be top of the losers chart maybe by Friday. These things work in cycles, and at the minute it appears to be really volatile. So by all means get into stable. It's a layer 1, it's a stable coin layer 1. It's probably going to have a good future ahead of it, but just be careful picking up the price. Now then, a few of the tokens in there. Pippin and Canton are up as well. Losers, we've got Doge. Doge is down a considerable amount. Layer 0 is down, which it did have a good run last week, if you remember on the news. Pi is down. That's going to go below 10 cents. That's going to go below 5 cents. It's not a $1.5 billion project. It is a scam, in my honest opinion, not the opinion of anywhere else that I may be streaming. Zcash is below $300. I'm not going to sit here and say I was right about this, because I wasn't. What I'm going to say was, throughout the entire journey of Zcash, I have said that this token is going to come back below $300. And we are back below $300. Is it going to go back towards $40, $50? Probably not. Is it probably going to come back down towards, I don't know, this is a good level here, maybe $200? Probably. Don't round trip tokens. You buy a token at $50 and it goes to $600, you should take some profits. Half, 25%, whatever it might be. Don't round trip tokens. Yes, it goes back to $200. Yes, you bought at $50, and yes, you're still a 4x up. And yes, you can still take profits. But there are going to be an awful lot of people out there that bought it between $500 and $600. Dash is the same. Dash is on a bit of a slide. Monero is on a bit of a slide. It was a narrative. I've said all along, I don't see why people were buying these coins unless it was rotation out of Bitcoin. Maybe it was that. But again, if a narrative is a narrative comes to an end, the token price falls. Now then, this is what's happening in the good old US of A. Good morning, Bullish Bull. You've caught us in time today. You, KB, Hidden, and a few others, you are the OGs, because when we were in the pits of the bear market 2 years ago, 3 years ago, you were the guys that were here. We've had the bull run. We've had the influx of people watching. We've had all of those big, 50, 60, 70 people watching live. Those days are over. We're back to the same crowd that we had when we started, apart from now we've got a bigger audience on Binance Square. US calendar, there's nothing today because it's President's holiday, so I think the markets are completely closed. Tuesday, not a lot really. Wednesday is kind of housing data. We got some big information last week, which was, of course, about unemployment is higher. I think it's the highest number of unemployment, highest level of unemployment since COVID, or highest number of job openings. I don't know exactly which one it is, but it wasn't good news for the economy. And everyone is now speculating that Powell is going to cut. I think Powell has said now at 2 or 3 consecutive meetings, he is not going to touch rates. He's going to leave that for the next guy. That's what he said. So I'm not expecting a rate cut any time before June. So again, Thursday, Friday is a big day. Friday's a big day. We have the PC index, core PCE, and we have new sales. So Friday's a good day, in my opinion. A good day for data on the economy, not necessarily a good day to be shorting and longing Bitcoin, which I know a lot of you do, including Kishan, who I wish didn't, but he does. And what can you do about it? It's not my position. Right, moving on then. We'll get through these quite quickly and get into the news. Cardano Swap launches native Bitcoin staking on the Bitcoin testnet 4. No wrapped Bitcoin, no custodians, and no bridge custody risk. A key step for CSwap towards mainnet to enable Bitcoiners to earn yield without their Bitcoin ever leaving their wallet. This is the promised land that Charles was talking about probably a year ago. Probably the beginning of this year. The beginning of last year. He was talking about this. And I was saying he's going to demo this at the Bitcoin conference in Texas or Miami or wherever it was. This is going to be the big thing. And then tumbleweeds. Didn't hear anything. It's now February, after the Lord Mayor's parade, after the Christmas party, after Valentine's Day, and Charles goes, hey guys, okay, this was the kind of thing where we talk about timing is important. Okay. You could have timed the sale of your Zcash at $600. If you haven't, you've still got time at $288. It's about timing. The reason that I think Polygon hasn't done so well, apart from the fact that Ethereum has been slashing fees for the last year or two, is the fact that it timed all of its announcements with the bear market in 2022. That's when Polygon was shining, and it shone at the wrong time. This is the worst time to announce this. We've had the correction of 50% to the downside. We've got the bear market blues. We've got people talking about Saylor being liquidated. We've got people talking about Tom Lee losing more money than anyone has ever done in history. And then Cardano goes, look, guys, we've got this. And this is big. If this works and you can earn 1 or 2% on your Bitcoin and you keep hold of that Bitcoin and you don't need to wrap that Bitcoin, then this is massive. Okay, so keep an eye on this. It's still in testnet. It's not live. But when it goes live, this is what Charles promised, and Charles might deliver. But he's like that Deliveroo driver that turns up 2 hours late. So your pizza's cold, or your chicken's cold, or your pasta's cold. You still get the food, but it doesn't taste the same, does it? And then just one other thing. I'm not having a dig at Raoul Pal. Okay, let me just point that out there. This guy is super intelligent, and you can learn an awful lot from Raoul Pal. You can learn an awful lot. He knows more about stuff. In fact, the saying is, he's forgotten more than you will ever know about the markets and the way that the markets work in liquidity. So take everything I say about him at face value. I don't mean any of this, but I will point something out. Everybody was telling you it was the M2 money supply, and then it wasn't. Everybody was telling you we were going to go into a banana zone and go from $80,000 to $250,000 on Bitcoin. It never did. It was a 4-year cycle, and now it isn't a 4-year cycle. This is the new and improved 5-year cycle, guaranteed to be stronger on dirt and leave your whites even whiter. No guaranteed is made. Charts match. Love you, Raoul. Basically, there is now a dip in the ISM, I think it's called. And he's basically found a chart that matches the Bitcoin price action. That's what he's done. And he's talking about the fact that Bitcoin is now in a 5-year cycle and we're going to peak in 2026. Now, the thing that's funny about all of this is everybody has been telling you for years and years and years that the Bitcoin cycle is finished. Did Bitcoin top in Q4 last year? Yes. Has Bitcoin dropped to where we are today from that top? Yes. Have we done a 50% correction? Yes. Did we retest the bull market support band? Yes. Did we get rejected at the bull market support band? Yes. So we're now in February the 15th, 16th, whatever it is today, and people are telling you that the 4-year cycle is dead. The 4-year cycle is relevant until it isn't. The only way we know if he is right is if we get towards maybe July, August, September, and then we start to see Bitcoin at $90,000 to $110,000. Okay? Now, if he's talking about Bitcoin peaking in 2026, he's talking about us going above $126,000. We're going to need the white swan of white swans, okay? We're going to need the eagles of wherever they're from to come in and we're going to need some kind of miracle. Now, I don't like to put my faith in miracles because it's not going to happen. So what is probably likely to happen is we're going to get towards the end of the year, and then there'll be another reason why this didn't happen. And there'll be another chart, and there'll be another reason why it's 2027 or 2028. And he has history of doing this, by the way. I'm not just picking on him. He was a Cardano maxi. Then he was an ETH maxi. Then he was a Solana maxi. And now he's a Sui maxi. Okay? That's all in the space of about 6 years. So he's jumped ship 4 times in 6 years, 4 years. 6 years, 4 projects. And again, I'm not having a go at him. Everyone is entitled to change their opinion. I get that. But there comes a point when it comes to patterns that you just have to admit that the pattern sticks. That's all I'm saying. Binance didn't cause the crash. Richard Teng says the October the 10th crash was macro-driven. There was 150 billion in equities versus 19 billion in crypto. The liquidation is really a market event, not a crypto event. It's not a Binance event. If you go and look at the 19 billion that was liquidated in crypto, which I have done, and many people won't have done, they'll just say it's Binance's fault, you'll find the number one platform for liquidations was Hyperliquid. And I never see Hyperliquid mentioned in any of these. I think of the 19 billion, Hyperliquid was responsible for about 11. And again, I'm not here to cast aspersions on anybody. What I'm saying is it's easy to beat or throw sticks at the biggest target. That's all I'm saying. Again, if Binance was the biggest one for liquidations, I would say it, but they weren't. Institutions could fire Bitcoin devs over quantum risk. Funniest headline of the weekend. Institutions could fire the Bitcoin devs over quantum risk. Big holders like BlackRock may lose patience if Bitcoin developers don't address quantum computing threats, says VC Nick Carter. He warns that if devs do nothing, institutions could take control and replace them. Okay. I have no idea who Nick Carter is, and I have no idea why they think that this can happen. Okay. This is not something that works this way. Okay. There is a consensus model with agreements, and you don't fire somebody who isn't employed. Okay, they don't have jobs. They are technically volunteers. I think they get rewards, but they're technically volunteers. This is one of those things where the distinction between somebody who's intelligent and who isn't is intelligent people on the whole know that they don't know enough about the subject that they are talking about, and they spend a lot of their time trying to research it. People with a lower level of intelligence tend to think they know more than they do, and then say dumbass rubbish like this. We're going to fire the Bitcoin devs. Okay, it's the kind of thing Trump would say. And I mean, don't get me wrong, Trump doesn't care how all of this works. He cares in the way that the money is accumulated. But the point of the matter is, it doesn't work this way. And again, we can go down here and we can talk about these things. I think that's the worst take I've seen in months. Absolutely the worst take I've seen in months. By a country mile. Moving on then, very quickly, Watch Your Guru, Logan Paul. He bought this NFT for $635,000 in 2021. 5 years later, it's worth $155. And, of course, the precious Logan Paul decided to block Watch Your Guru. Again, he must have a very fragile ego to do something like that, especially after all the other nonsense he's got up to as well. Moving quickly on then, Strategy can withstand a drawdown in Bitcoin price to $8,000 and still have sufficient assets to fully cover debt. This is in response to the interview that Michael Saylor had on TV, where he basically said we can go to $8,000 and still be fine. And I think I covered this a few weeks ago as well, talking about the fact that they have about $50 billion worth of assets, and they've got about $6 billion worth of debt. So Bitcoin can come down considerably. But the one thing to bear in mind is, again, it does show a little bit of naivety when it comes to people in the crypto space. A share issue is something where you issue shares in your company, and you issue them to existing shareholders, normally at a discount, and then you do a public offering, and you buy those shares. That's not debt. That is shares in the company. Now, if a company offers you shares at $100 and you think that share is going to go to $10, you're not going to buy the share. But people are buying these shares. And the more people that buy these shares in Strategy, the more he can buy in Bitcoin. But it's not debt. That's an important thing. People are calling it a Ponzi scheme. They're doing a share issue. Now, is it abusing the share issue policy, procedure? Probably yes. But it's not against the law, and it's not a Ponzi scheme. He's doing it completely normally. If I said to you, do you want to buy this piece of paper for £100, and you buy that piece of paper off me for £100, and then you say to me, that's only a piece of paper, and I'll say, I know, but you paid £100 for it. What's the difference? You are buying shares in a company that holds a lot of Bitcoin. That's all you need to know. Now, if the company was liquidated, just to give you an idea, if the company was liquidated today, minus the $6 billion in debt, it would have $43 billion of Bitcoin. Okay, the Bitcoin price would go down if there was a sale of that amount, yes. But just bear in mind, that is how they are operating. I don't necessarily agree with it. I don't think it's the right way to do it. They are simply converting dollars into Bitcoin. That's how they're doing it. It isn't a Ponzi scheme, though, as people keep accusing him of, especially Peter Schiff. Right then, let's move on very quickly. And remember, wherever you are watching, hit the follow button, hit the like button, the subscribe button, whatever you've got there, hit some buttons and let me know that you're watching. Now, Cathie Wood predicts $1.5 million Bitcoin signals gold exit. Again, take everything that is said here with a pinch of salt. How do I get rid? You can't click on that. You can't click on it. They've hidden the X behind a pop-up. Wood calls for shift from gold to Bitcoin. Of course she would. Why wouldn't she? She said the current environment favours Bitcoin over gold. She explained that capital may gradually rotate from traditional assets into digital alternatives. According to her, this transition is still in its early stages. Wood has previously described Bitcoin as a long-term store of value. She reiterated that view and linked it to changing investor preferences. We believe Bitcoin is becoming the new store of value, she said during recent remarks. She's given a $1.5 million target for Bitcoin. The forecast is based on an increased institutional adoption and limited supply. The fixed issuance model is often cited in valuation discussions, and there she is having a good chat on the rundown. She pointed to growing demand from corporations, asset managers, and sovereign entities. There are only 21 million, but there isn't really. It's probably about 18 million if you take out Satoshis and Lost. That's not a lot of Bitcoin to go around. We're not going to go into too much depth about it here. What I would say about this is that in 2024, Cathie Wood changed her Bitcoin target about 4 times. And the targets that she gave in 2024 were wrong. The targets that she gave in 2025 were wrong. Not majorly wrong, but still fairly out. And I think the issue is that it's, again, they keep pushing their targets further into the future and making the targets bigger. So I think at one point it was $1.2 million per Bitcoin. Now it's 1.5. I'm sure in maybe a year's time, 6 months' time, it's going to be a $2 million Bitcoin target. Same with Tom Lee and Ethereum. For those of you that are new to crypto, please bear in mind that these targets they're talking about are the bullish macro, bullish adoption tops. That's what they are, okay? They are not an average price. An average price is probably going to be nowhere near $1 million. Just bear that in mind. Now, I made a video about this yesterday and put it live. This is basically the Bitcoin chart as we see it. There are several lines on this chart. One of them has probably got to come down a little bit. This is the bull market support band, which is coming in at about Let me just zoom in a little bit, get it accurate. Coming in at about $91,000. Okay, at some point we're going to hit that or wherever it falls to. That's my absolute top bullish scenario right now, which I don't think we're going to get to. The next target down, which is kind of this bottom of this range here, is kind of about 86,000. Again, I don't think we're going to go anywhere near that. The target that I think we need to break to actually do anything is this one here, which is $74,000. Hang on one second. Let me get rid of that. There we go. My target is here. Now, I was thinking today, what do we do? How do we get to the bottom before October? So October, for me, is the cutoff for when we start to move back up. It's a year after the all-time high. Now, I've said that a bull run lasts 6 to 12 months. A bear market lasts 6 to 12 months, roughly. So that would take us to April, May time for the earliest it could finish. And the latest is, of course, October. So as I've said on different videos, we might wiggle our way up here and then come back down. And the target here is about $50,000, okay? Now, that may take us till October. But what's the scenario where we actually do come straight back down and we do bottom in April or May? Well, that would be, for me, and if we're going to do it soon, so if we are going to have an accelerated bear market, I think if we get rejected off here, which is 74,000, so let's say we just wiggle around here for a little bit. We just do a little bit of a wiggle round, okay? And then let's say we do get to 74,000 and then we get rejected. Can that take us straight to 50,000 in one go? Or do we get rejected, come back down to where we got to, which is 60,000, come back up, have another kind of fake out, maybe turn this level into resistance and then nuke down? How do we get to 50,000 soon enough for us to then go back up? And I think it's probably one of those two scenarios. So we go to 74 and get rejected, and then we nuke straight away on maybe more macro bad news, whatever it might be. Or do we have the kind of half attempted run, we come back down, or is that more likely to happen? Now that does look very similar if you look up here to what we did here. It was kind of up, down, kind of similar to that. So I think if we want the bull run to finish sooner, then either we get to 74 and nuke all the way down, or we get to 74, find resistance at this low point here for a little bit, come back up, get rejected off where we are now, and then nuke. They're the two scenarios where we come back down. And as I have said, I think 50,000 is our bottom. 50,400, 52,000, whatever it might be. I think that's our bottom. But that's only if I'm looking at the most negative outcome. And as we've said before, when we look at both sides, you look at the negative, you look at the positive. They're the outliers. Maybe we just look at the boring average. The boring average and the boring fact of the matter is that we are sitting right now, today, at exactly the all-time high of 2021. And in a pattern, and going back to the 4-year cycle, in the 4-year cycle pattern, we come back to the previous all-time high. And I have been saying that for years. And I have said 69,000 is the bottom. So when I talk about the 50,000, when I talk about us nuking down there and all that kind of thing, that's based on the drawdowns that we've had, okay? But we shouldn't really go as deep because we never really went as high. So don't think that you should not buy Bitcoin because it's going to go to $50,000. I'm saying The worst case scenario is we don't get above 74, we get rejected at 74, and we tank. That's simply the most bearish outcome for me. The most bullish outcome for me is we are exactly at the previous all-time high, which is where we come down to, and probably 50% chance of this being the bottom. But we've got to look at other different scenarios. The same way that I don't think we're going to go straight to 91,000 is the reason I don't think we're going straight to 50,000. But we are closer to 50,000 than we are to 90,000, where the bull market support band is. Putting that out. Anyway, they're just my scenarios. If we want the bear market to finish sooner, then we've just basically got to get to the bottom as fast as possible. That's not going to be February, by the way. We could be talking about April, May as the earliest for it to finish. But again, I'm not changing from my October. I think October is the bottom. And again, I think we could just wobble around, take our time, and then come down. I'm just keeping an eye on chat. White House crypto advisor, trillions are waiting, but Washington must move the Clarity Act and the Genius Act. Again, if we're going to look at what could fire us up, okay? And I know there's a massive argument, and I'm in the wrong on this, but I don't care. People say that show me the charts and I'll tell you the news. Okay? That's the mantra. And I don't believe that to be the case. I believe that it is a feedback loop. So I think that the news affects the charts the way the charts reflect the news or reflect the markets. So what do I mean by that is I mean that if you get, and if you're talking about a rate cut that's happening in March, for example, that's going to be priced into the charts. So the charts lead the news when it comes to stuff like that. If Donald Trump decides to do something with a country that begins with I, that's not going to be priced in because it's a shock. So I don't believe that one or the other is wholly responsible for the price action of Bitcoin and the S&P and everything else. I think it is a combination of the two. Now, if we're looking for what could ignite the next leg up, the next surge, we could look at the Genius Act and the Clarity Act, both of which are still being wrangled about in America. The banks don't want interest on stable coins. The stable coins want to pay interest. They're at an impasse. Trump wants an agreement. Now, the White House crypto advisor says trillions are waiting, but Washington must move. And the reason is that big, large institutions are not going to come piling into crypto without legislation to protect them and to protect their investors and to protect the markets. Simply not going to happen. So until legislation exists, the risk manager will not sign anything off, and quite rightly not sign anything off. ETFs have gone an awfully long way to giving institutions access to Bitcoin and crypto. Absolutely, 100% agree. But as far as banking is concerned, which is what really matters, the banking and the stable coins and all that kind of stuff, that's going to come in these two acts. And they're not passed. And again, we are in February. When are they going to get passed? Are they going to get passed in June? Are they going to get passed in December? These are just the unknowns. And you're going to get people hedging the bets that it's going to be March or April, fine. But we don't know. And there doesn't seem to be an outcome readily available for both parties to be happy with. So Patrick Witt, Executive Director of the President's Council of Advisors for Digital Assets, made the remarks to Yahoo, which said that the US rules still lack a clear, workable framework, leaving what he described as trillions in potential capital on the sidelines. The Clarity Act ticks towards the 2026 midterms, and again, they are on November the 6th. So again, if we're talking about an October bottom and then a recovery towards the end of the year, that ties in perfectly. He warned that the legislative calendar narrows as the November 2026 midterm elections approach, a practical constraint that can freeze complex negotiations. The House has already advanced the approach to market structure, but negotiations have tightened. This is what it's all about. Now, the one thing to bear in mind about these midterms is the chances of the Democrats taking over the House from the Republicans is zero, apparently, according to the experts. And that's because they need to swing 56 seats or something crazy like that, which has never happened in the history of US politics. So I don't expect the midterms to actually cause any more volatility. I think Trump will lose some of his power, but not enough to lose him the House. So Trump might lose a few seats. Really no president, major president in the history has ever come in and been popular for their entire term. Look at the UK, look at Germany, look at Ireland. All of their Taoiseachs, prime ministers, presidents have come in, and after a few years, people just turn the narrative on them. And maybe it's right, maybe it's wrong, but that's where we are. Now, ETH stalls at $2,050 as staking hits record levels and ETH and Bitcoin stays heavy. The staking of Ethereum is up to 30%. So what, there's a 120 million ETH. So that's 40 million staked. That is an impressive number. And again, what happened when the price of Ethereum went up back in September and October? There was a massive queue to unstake and sell. Now we're seeing people staking because they don't expect the price to go up anytime soon. Okay, so bullish for the Ethereum blockchain. It's basically people telling you that the price isn't going to go up. That's all this should tell you. So this is good news for Ethereum. It also reduces the supply sitting around on exchanges. So by tying up a third of all Ethereum, we are seeing a third of all Ethereum not on exchanges. It's pretty straightforward. And again, this is great news for Ethereum. We've talked a lot about them in the last few weeks. They're making some really good changes, making some really positive moves. Vitalik seems to have found his way again. He was out this weekend talking about privacy, talking about predictions markets of all things as well. And he seems to have found his focus. And that can only be a good thing for the Ethereum blockchain and the Ethereum Foundation as well. But anyway, the staking is up. This is all positive. I'm going to run out of time if I keep talking about stuff like this. But again, it's bullish for the Ethereum blockchain, but it reflects the fact that people don't expect the price of Ethereum to go up. Now, you have a couple of scenarios. Okay, if you think the price is going to go down, you sell. You think the price is going to go up, you hold. That's great. These people are sitting on the fence. Yes, they're not selling, but by storing it and locking it away on the Ethereum blockchain, they're also not indicating that they don't think the price is going to go in. If people like me, I've said I'm not selling my Bitcoin, I'm not going to simply sit on my Ethereum and wait for it to go up or wait for it to go down. I'm going to put it to work. And I'm earning 3% on my Ethereum right now, whatever it might be. So if I earn 3% for the next year, for example, or year and a half, 2 years, I'm going to be earning a decent amount of Ethereum. Well, that's better than selling because you could be wrong and the price could skyrocket. And I think that's where it is. It's the indecision in the market. And I'm sure if Bitcoin had staking, if Bitcoin was proof of stake, Bitcoin would also be sitting at record highs for staking because people don't know where it's going to go. It's too precious to sell, and maybe they don't want to buy. So if you don't want to sell and you don't really want to buy, what do? You earn from it. You put it to work and you stake it. That's the way I would read into this. I mean, again, great for Ethereum, great metric. They can angle this to make it look like Ethereum is just getting stronger and stronger. Lovely. That is what I like to see. That's what I like to see. Are we just not going to get connected to this now? Or is it just not going to work? Fine. Fine. Right, we're going to move on then. We're going to talk about Aave. Now, this is a pretty big one. There are not many companies left or projects left, that I think are worthy of an ETF. And there's a reason for that, is that we've gone past the stage of ETFs being of value to you, to the stage where people are creating ETFs to make money. So if you're a small company, you make an ETF, you might make $2 or $3 million a year off that, fine. But there are still plenty of ETFs that need to be done, in my opinion, on really solid projects. One of them is Chainlink. We need some really good Chainlink ETFs. And one of them is Aave. Now, full disclosure, I don't hold Aave, and I'm probably never going to hold Aave, but it's the biggest DeFi project in the world, as far as I'm aware. And what Aave does, very simply, its project sits on multiple different blockchains. And we covered this a little bit when we talked about Maple Finance at the weekend. Aave are connected to, clearly they're connected to Ethereum, but they're also connected to Plasma. They're also connected to a lot of other layer 2s, EVM compatible layer 2s. So Aave really is kind of like the DeFi version of Chainlink. It's got its fingers in all the pies, and that gives it the deep liquidity. So if you're going to choose or cherry pick some new ETFs of projects that are working, of projects that are going to be successful, clearly Chainlink, clearly Aave, and I expect them to do well. Now, they have had their ETFs applied for, and it's currently being reviewed as Grayscale files a 2.5% fee ETF. And again, this is exceptionally high. There are some which are charging 0.1%, 0.2%. They're charging 2.5%. Grayscale is a very, very expensive ETF, and competition will come in and take the floor and walk away with stuff like this. So again, I don't think that Grayscale are going to be the number one ETF for Aave in the future, but it doesn't matter. It's going through the process. So they have proposed converting their Aave Trust into a spot ETF. For those of you that don't know, Grayscale had Bitcoin, Ethereum, Solana, all trusts. Aave Trust, they are privately held funds held by Grayscale that you buy the shares in that fund from Grayscale or through your broker to do. And they are private funds, not really private funds, but they're classified as funds. They're not exchange traded products. So they're going to convert that fund into an ETF, and that is what they've applied for. The structure would migrate an over-the-counter trust format into a 1940 Act style exchange listing overseen by the SEC. Don't know why we quite needed that amount of information. Grayscale submitted the S1 filing to convert the vehicle into a spot ETF, proposing a 2.5% fee, targeting the New York Stock Exchange ARCA for listing and designating a certain platform for custody. The report notes that trust assets under management are small, under 1 million, underscoring scale and liquidity headwinds in any launch phase. As reported by CNBC, trust conversions with relatively high fees tend to lose out to cheaper alternatives. This happened with Grayscale and BlackRock. Grayscale had hundreds of thousands of Bitcoin. They went live with an excessively high fee that dumped the Bitcoin market for months. BlackRock came in, basically cleaned up. Why Grayscale do this, I have no idea. I don't know why they do this. It makes no sense whatsoever. So again, this is bullish. Again, it's just one more step for the ETFs. We really want probably 10 to 15 solid projects as ETFs. Bitcoin, Ethereum, Solana, absolutely. BNB, absolutely. But then we've got the Cardanos, the XRPs, the Chainlinks, and the Aaves. They come next. And that would bring us up to about, what, 8 really solid ETFs? So we've still got some time to go. We've still got some projects that could go live. I think at some point in the future, we're going to start to see category ETFs, which are maybe, DeFi ETF, AI ETF, RWA ETF. I think that's coming in the near future. Right then, we're going to move on very quickly. We've got 15 minutes left. Remember, say hello if you are in chat. Everybody who is anybody has left today. I can say that for nothing. In fact, what we need to do before we go any further is I need to go and check up on Binance Square. I haven't checked chat, and since we've lost an article, I probably have time to go and check chat. So if you are on Binance Square, say hello, and we will drop a box, and we will check very quickly now. We'll do some shout outs. There we go. Good morning, Johnny. Good morning, Gabrielle. I hope you're okay. Good morning, Elsa. Good morning, Man on Chain. Mary Jesus, hello. There's a lot of people in chat. I hope you're all doing incredibly well today. Good luck. Follow me, follow you back. There's a lot of that going on. Right, what we'll do is we'll very quickly drop a box. Simply because you've all been so nice in chat, really. Good morning, Kayan. I hope you are well. Remember, there's certain words I can't say on here because the AI doesn't like it. There we go. Done. Sent. So that box will drop in the next 5 minutes. Don't forget to say hello. Yep, Mary Jesus is in chat. I've just seen her up there. Yep, Mary Jesus is there. There's quite a few people in there. Yep, Kyan Creed, there are. Anyway, as I said, if you've got any questions, drop them into chat and I will try and answer them. But for now, I probably should go back to the main stream. So that box will appear in about 5 minutes. So enjoy that. Now then, we're going to move on from talking about Aave. We're going to talk about My Brazilian. And again, this is one of those things. I don't think it falls into the same category as we're going to sack the Bitcoin developers. But it's not far off in terms of I don't quite think some people have thought this through. So France, for example, have talked about buying 1 million Bitcoin. Brazil, in front of your very eyes, Brazil targets 1 million Bitcoin strategic reserve. Stablecoin taxation also in the works. I don't understand how America, France, and Brazil are going to get to 1 million Bitcoin if they don't start buying Bitcoin. It's signposting what you're trying to do, number one. And what you should be doing is, I think, what the Arab nations are doing. So UAE and others, Qatar, there was another one as well. They are basically buying Bitcoin OTC. And they're doing it quietly and as they should. Okay, Norway is another country that's looking at buying a lot of Bitcoin. Now, there's 18 million Bitcoin. 100 plus countries around the world. Private entities, obviously BlackRock, MicroStrategy, they're all trying to buy 1 million Bitcoin, okay? And I think it shows naivety. Naivety because these kinds of statements are made by people that don't know what they're talking about. Look at the Dutch 36% tax on unrealized gains when you want to know about people who haven't got a clue what they're talking about. Brazil are never going to get anywhere near 1 million. France are going to get nowhere near 1 million. America, as probably one of the top 2 or 3 economies in the world, are probably going to get close to 1 million. You've then got BlackRock and you've got Saylor. So just those 3 alone, and I've just said to you before, there's about 18 million Bitcoin in the world in total that will ever be mined. So 1 in 6 will be owned by one of those 3 people, 3 companies. Where do France, Germany, the UK, where do they get their Bitcoin from? Because it doesn't exist. There's 18 million in the world. And yes, your Bitcoin price is at $69,000. And yes, you are upset because you want it to be at $100,000. What is going to be the price of Bitcoin when nation states start buying 10, 20,000 Bitcoin a month? What's the price going to be when there are 5 or 6 countries buying 10 or 20,000 Bitcoin a month? It's going to go through the roof. And maybe Cathie Wood and Rich Dad Poor Dad and maybe those people will be right. But we're not at that stage yet, so we can't have a $1.5 million Bitcoin. And by the way, $1.5 million Bitcoin is a drop in the ocean. It's not going to be 1.5 million at all. It's likely to be in $3, $4, $5 million Bitcoin. It's going to disappear very, very soon, and there's going to be none left. If you look at the amount of Bitcoin on exchanges, what we're running at now, Is it about 2 or 3 million Bitcoin on exchanges? 1 million, something like that. 1.2 million Bitcoin on exchanges. Where does it come from? It doesn't have a printer. You can't dig it out of the ground. You can't press a button on a spreadsheet. You can't make it up. So where does this Bitcoin come from? It doesn't. It doesn't come from anyone because it's not going to be able to get there. So it becomes a strategic reserve. Countries are likely to trade Bitcoin between each other. It's not going to replace the petrodollar, but they might trade Bitcoin on different scales. So we're not going to talk too much about this either because we've got 10 minutes, but they want to introduce a strategic reserve. So the RESBIT, the so-called Strategic Sovereign Bitcoin Reserve, now contemplates the planned and gradual acquisition of Bitcoins as strategic reserve assets of the Union to accumulate at least 1 million Bitcoin over 5 years. So 200,000 a year, which is, for argument's sake, 16,000 a month. So they're going to buy 16,000 a month on top of what everybody else is doing. So immediately there, you get 3 or 4 countries doing that, and you're getting 60,000 Bitcoin a month disappearing on top of what is already disappearing. It doesn't add up. The numbers don't add up, okay? It's like building a football stadium in the middle of the desert with a 50,000-seater capacity, and there are 6 tribes of 500 people living nearby and saying, we're going to fill this stadium. What are you going to fill it with? How do you buy 1 million Bitcoin that don't exist? Where does it come from? Now, this is also utter nonsense. And it's more than likely going to be introduced by many, many other countries, by the way. So they're going to have a 3.5% tax on stablecoin purchases and remittances. It's money. They're taxing money. According to Vala Econômico, the Brazilian government is preparing to close what many considered a grey area by classifying stablecoins as digital assets. The proposal will come from the Federal Reserve Service, which will specify that both stablecoin purchases and remittances will be taxed with 3.5% on their operations. Nonetheless, individuals will be exempt from paying this if they don't transact over $2,000 a month. Now, again, my issue is, if I buy something for $100 from Brazil, do I pay VAT of 15%? Do I then pay 3.5% on top if I'm Brazilian? What do I pay? Because everything becomes a very grey area when you start doing stuff like this. And again, let's not forget, tax is theft. At the end of the day, that's what it is. If you don't pay it, they put you behind bars. So you have to pay it. You make up something. You invent a product that's really, really popular, and it's outside of the tax system. Guess what? A tax will be applied to whatever it is you have made. That's how they work. They just want to drain your funds and add it to their coffers. They want to basically slow down the velocity of cash so they can print more of it at their end. That's all it really comes down to. Now then, we're going to move on very quickly. Let me check. Yeah, we're doing okay. Right then, Ledger and Trezor wallet users targeted in new crypto theft. I put a tweet out about this actually, which I'm going to bring up very, very briefly because I kind of want to give you my thoughts on this while we read this. Gone to the wrong thing there. Right, let's read this out in a second when I've got this up. I'm sure I've just clicked on Twitter. Let's have a look. Is this going to load for me? We'll go back to that. Let's go to this one first. Ledger and Trezor wallet users are reportedly being targeted in a new crypto theft campaign, according to authorities. Crypto scammers have kicked their activities up a notch, ditching their previous model of targeting hardware wallet users. According to reports, criminals are now sending users of these wallets physical letters delivered to their homes, pretending to be from Trezor and Ledger. This is done to trick them into submitting recovery phrases of their wallets, which are then used to carry out the theft. The letters claim recipients must undergo compulsory checks or transaction checks to avoid losing access to functionalities within the wallet. The scammers use these to create a sense of urgency. Now, where did they get the addresses from? That's the question I want to know. Where have they come from? Now, this is my breakdown to a question posed by Binance, which we'll go through in a second. In the letter received by the users and checked by cybersecurity expert Dmitry Smilyanets, the criminals claimed that authentication checks will become a mandatory part of Trezor and urged users to complete the process by February the 15th or risk losing certain functions. Now, we don't need to read too much about this. This is kind of just an example of a warning that comes up. This is my reply to Binance. This is the order of how you should store your crypto. Cold storage, Trezor and Ledger, yes. Then on a SEX with security, Binance, and then hot wallet in that order. Now, the reason we cover this from time to time is nobody should ever be given your seed phrase, number one, and that applies to the cold storage and the hot wallet. Okay. Now, if you are new to crypto and you are listening to this now on Binance Square and you're new to crypto, listen to me very carefully. You keep your money on Binance and you turn every single security feature on. That is 2FA, anti-phishing codes, mobile authentication, facial recognition, 2FA, Google 2FA. You turn it all on. Turn it all on. And you keep your funds safe. Now, my funds are on exchanges. Some of my funds are in hot wallets. I, touch wood, have never fallen victim to any wallet hack. I have lost funds in crypto. Of course I have. I've lost funds on Celsius. I don't know how much I lost on Celsius. It wasn't a great deal. I lost a small amount on Celsius. I lost a small amount on Luna, USDC, whatever it was called. I didn't lose anything in FTX, but I have lost funds along the way. I'm not sitting here and saying I'm perfect. I've lost funds. What I'm saying is I trust major exchanges more than I trust hot wallets, which is why they're last on the list. I also don't want to go down the cold storage route for now. I like them. I like the idea of them. I don't want to store my crypto on them. And the reason is a good friend of mine, many, many years ago, he got himself a Ledger and he didn't connect it to his computer for about 4 years. And he connected it to his computer and the Ledger was five years old, maybe. And he could not update the firmware on that Ledger to get access to his crypto. It took months. And that is the fundamental flaw of cold storage wallets that nobody talks about. If you take a Ledger or a Trezor and you put it in a safety deposit box and you don't touch it for 10 years, which is what you should do, they don't really have a proper mechanism yet to update the firmware on that Ledger or that Trezor. Now, this was a very recent example. I think he did it in 2016, 2017, and I think he tried to unlock it back in 2024, 2025, something around that period of time, and he couldn't do it. It took him hours and hours and hours. Now, imagine that you have 5 Bitcoin, and you put them on a Ledger, and you put it in a safety deposit box, and then you did that in 2014. And let's say you did that in 2016, okay? And then let's say that Raoul Pal is right and we go to $150,000 this year. And you go to plug that Ledger into your computer and it says firmware upgrade. And then it takes you to a 404 page and you can't get your money off. Why have they built such a system that doesn't take you through the firmware upgrade? It doesn't sit well with me. Now, that's why, in my opinion, you should use a SEX like Binance. They want a copy of your passport, fine. They want a copy of your address and utility bills, fine. Provide it. But lock it up. Make sure you've got all your security settings turned on, because if you do, it is nearly impossible for anybody to get access to your funds. Even if they get your username and password for Binance, you've still got your SMS, You've still got facial recognition. You've still got email. You've still got ways that they have to check before they can get in. So yes, it's a pain in the backside, but it's the safest place for your crypto. And I know the maxis out there will be say, put it on a ledger, not your keys, not your crypto. That might have been the case 5 years ago. It's not the case today. Today, we have more basic users of crypto than we've ever had. And basic doesn't mean simple or stupid. It means people who are not technically competent. It may work for 100,000 people. It's not going to work for 100 million people. And that's what's important to understand. The last thing you should do as well is put your money anywhere near a hot wallet. And that's the likes of Phantom or the likes of Solflare or Trust or MetaMask. Don't use those kinds of wallets for the majority of your funds. You have to keep them safe. If you click the wrong link on Telegram, the wrong link on Discord, you are finished. You've lost everything. You're going to have to throw your computer in the bin, start again, okay? So, in my opinion, if you're brand new to crypto, number one is a CEX, centralized exchange. Number two is cold storage. And number three is hot wallet, in that order. If you are really good at what you do it in cold storage and keep some funds on a CEX. That's it. That's all you got to do. Anyway, enough of that claptrap. Let's go back over here. It's 12 o'clock. The stream has kind of finished. There is a few things I want to tell you about. On Wednesday, we have our quiz. Wednesday night is the Wolfies quiz night. And that will be on Binance Square, as well as a few other places. And what we will be doing is asking questions about NFTs, how NFTs work. We'll be asking some questions about Wolfies, of course. Wish that would stop coming on. And we're going to have a bit of a fun quiz. And that's what we try to do. So this Wednesday at 7 p.m. Central European Time, which I think is 6 p.m. UTC, we're going to be streaming again. So make sure to tune in. Thank you, everybody, for coming. There's a lot of people in chat today. Thank you all for coming. I will see you all tomorrow, same time, same place. Don't forget to give us a follow. Take care.